Ajay Garg, the MD of Equirus Capital, to talk a bit about the markets and, of course, even their deal with Federal Bank. Mr. Garg, thanks so much for joining us on ET now, and congratulations. Since we have you, we must talk to you about the deal done with Federal Bank. To start with, tell us, what does it bring on the table for Equirus?
So basically, what we had embarked on the journey, Ajay, and thanks for the wishes. We had embarked on the journey to make Equirus a broader mid-market platform from an advisory shop where we, few years back we started the institutional equities desk, ECM desk, and last year we started PMS. With the Federal Bank relationship, it will help us broaden our debt capability with DCM and various other debt products also coming in, and also use the broad network which Federal has on the wealth side for our platform. So I think that will enable us to add this 2-3 more products line and also give us a broader geographical and client relationship coverage. So in that way it will be pretty beneficial for both the organizations, where Federal will also get a lot of their equity, for a lot of their clients, an ability to offer equity products through Equirus.
Ajay, hi. Actually, it's me now. I think we it was a scratchy line for you. That was my colleague Mubina. But having done that deal now, let's focus on markets. 2018 has been weak. In fact, right now we are 9% down from the top. Do you think that's how the rest of the year would actually pan out? A weak year or the year of consolidation? What's your view there?
I'm sort of on the view of extreme consolidation and positive uptrend. I think as last 2 years there has been significant macro initiatives which would have impacted earnings. So this year we are expecting the earnings to be much better, and which on the back of that, post this March is over, because I think till March you do expect this whole churning of mid caps and small caps and large caps which will be happening in the mutual fund to get over. And once that is done, then I expect the markets to sort of have sort of more direction when they start looking at the FY19 earnings coming into visibility post the FY18 results. So that would be the direction one would look at it. So this would be a good year. I do expect the issuance pipeline and the capital market activity to remain for most part of the year in the back of good earnings, and the stock market remaining pretty buoyant from that point of view.
That's true, Mr. Garg. Mid-March usually does see some money being taken off the table. By the way, just talking about the markets, 12 points, just about 12 points higher now. So just in the last couple of minutes, you are seeing a significant amount of gain given up by the markets, on an intraday basis. In fact, just the last couple of minutes, we seem to have given off about 20 odd points. This year, of course, is going to be a politically heavy year. How do you read signs coming in from the Northeast?
I guess there are a bunch of state elections which are coming in. I think the market for the first half of FY19 don't expect to sort of worry about it, but the second half of FY19 will start doing its own calculation in terms of who will really win the next general election, and that will have some sort of a bearing in terms of when the trends emerges. And it's too early to talk about FY19 general elections right now, but yeah, do you expect the second half of FY19 the market started getting into those calculations?
Ajay, if you do believe that overall there will be a lot of consolidations, but earnings will actually improve, which sectors are you actually indicating towards where the earnings will improve and they will actually lead the market higher going forward?
So you're definitely seeing a big activity on the construction side. You're seeing a significant amount of order coming out. So you're definitely seeing a big move there. Building materials continue to be good. We're still seeing a significant amount of good work happening there. Auto comps continue to do well. Number growths are coming okay there. And I think the IT, it's not got to do much with the domestic market, but given the way the rupee dollar is and all the parameters, is a sideways market, but it will do much better than last year. Pharma, we are again not able to form a specific view on terms of the direction it will take. And then I guess a domestic consumption theme continues to do well, and I think that's where we have seen that as the GDP continues to grow well and the purchasing power improve, we are seeing very good numbers coming on domestic consumptions.
Okay, Mr. Garg, just before we wrap up this conversation, the M&A space, that's something that has been very active. Where is investor appetite and good response? How would this year be when it comes to M&A?
So I think a big chunk of activity will revolve around the NCLT cases where there is a serious pressure and direction on resolving the bad asset and cleaning the banking system from that perspective. And I would see that in the next 12 months most of the bulkiness of those transactions will involve those cases. We've only seen some of them get resolved earlier this year, and that trend to continue for the next 12 months. We also started seeing far higher interest from overseas investors who have obviously started noticing the way the markets have turned around and are far more interested in India what they were a few years back.
Thanks very much, Ajay, joining us on the show today. That was Ajay Garg, MD of Equirus Capital, which has recently sold some stake in the company to Federal Bank.